In this video, we'll be comparing Rivian and Lucid, the two most exciting electric vehicle startups on the planet. Now before we get into this video, which is full of compelling insights, I just want to set the scene. Did you know that Tesla was founded in 2003? Almost 2 decades ago, 19 years. And boy have they accomplished a lot in the intervening time. This, however, may come as a surprise to many people watching. Anyone want to guess in the comments below? When was Lucid founded? Let me know your guess. What about Rivian? Let me know your guess in the comments below, and please pause the video because I'm about to spoil it. What's your guess? Don't worry, this isn't a gotcha. I'm just curious. What is your perception? Given both companies are now starting to ramp up their very first production vehicle and struggling, although Lucid more so than Rivian, you'd think these companies are relatively new, right? Wrong. Lucid, previously known as ETHEREUM, was founded in 2007, 4 years after Tesla. One more time. Tesla founded 2003. Lucid 2007. And how about Rivian? 2009. 6 years after Tesla. To put that in context, Lucid is about 80% the age of Tesla, and Rivian about 69%. Let's round up to 70%. Did that sink in? Put differently, Lucid is currently Tesla in 2018. And Rivian is currently Tesla in 2016. In 2016, Tesla delivered a little over 75,000 vehicles. Last I recall, Rivian aiming for around 25,000 deliveries this year, a third of where Tesla was at. In 2018, Tesla delivered around 250,000 vehicles. Lucid, after massively revising down their delivery estimates for the full year twice, is now aiming for around 7,000 vehicles delivered in the full year. At the same point in time in their lifetime as a company, where Tesla delivered about 250,000 vehicles. Just saying. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. So with that important context out of the way, it's time to dive into this fantastic article written by ForwardCap. If you want to follow along, there's a link in the description of the full article in which we compare Rivian and Lucid. Occasionally I might throw in a few comments about Tesla just for context. Comparing Rivian and Lucid, diving into the two leading US startup OEMs by ForwardCap. In this article, I'll compare, contrast, and give my opinions on the two leading US EV startups, Rivian and Lucid. Before diving in, there are 2 points I want to get across. 1. These are high-risk stocks. I don't own either stock currently. That makes 2 of us, ForwardCap. Largely because of the risks associated with scaling production and reaching positive cash flow. Again, jumping in here, 2 enormous risks, which alone may not even be enough to justify their current valuations. Again, jumping in here, no comment. 2. There are many structural advantages both companies have over legacy automotive manufacturers like Ford and Government Motors. Many of the issues restricting the valuations of traditional auto OEMs don't apply to Rivian and Lucid, and these are fair points as well. New EV startup, no legacy overhang, fresh sheet of paper, clean slate design as a company. This is an important point. This article has 5 sections. 1. History. 2. Shareholders and partnerships. 3. Product offering. 4. Financials and valuation. And a summary. Robert Scaringe founded Rivian in 2009 and has been the CEO since. Rivian unveiled its first 2 products, a pickup truck and SUV, in December 2017 and acquired its Normal, Illinois facility from Mitsubishi for $17 million in January 2018. The first R1T pickup truck was produced in September 2021, and Rivian subsequently raised $13.5 billion through a traditional IPO in November 2021. As of July 2022, Rivian had around 14,000 employees. Just adding a little bit of context, last we heard Tesla around or maybe a little over 100,000 employees. And now, a little bit of history on Lucid Motors. Lucid is led by Peter Rawlinson, who joined as CTO in 2013 and was appointed to CEO in 2019. Rawlinson served as Tesla's VP of Vehicle Engineering from 2010 to 2012 and was a senior engineer on the Model S. Rawlinson's true involvement and impact at Tesla is debatable, but it's clear he left Tesla well before initial production challenges were solved. And again, I just want to jump in here. This is an important point, especially given the fact that Lucid at this point in time are severely struggling to ramp to volume production. In November 2016, Arizona officials announced they planned construction of Lucid's $700 million factory in Casa Grande. Original plans were for vehicle production to begin in early 2019, but construction didn't begin until December 2019. Lucid went public through a SPAC, which raised $4.4 billion and closed in July 2021. Initial vehicle production began shortly after in September 2021. As of June 2022, Lucid had 5,600 employees. Conclusion: both Rivian and Lucid are at similar stages, and that's part of what makes this comparison so interesting. Both companies make only fully electric vehicles, no hybrids. were founded within a couple of years of each other, and again within a couple of years of Tesla's founding, which puts things in perspective, and began customer vehicle production in the same exact month. They also have similar market caps today, which makes the comparisons very relevant from an investor perspective. While both companies have had their fair share of executive turnover, Lucid has experienced more management departures. Lucid has shaken up its leadership team in both May and September of this year as the company struggles to ramp production. Just want to jump in here again. What's that thing that Elon keeps saying, has been saying for years, more than half a decade, maybe a decade plus? Something about prototypes are easy and production is, what's the word again? Yeah, I forgot. Someone let me know in the comments below. I keep forgetting that one. I guess that means it doesn't really matter. Another interesting data point is that Lucid's current SVP of Digital, Michael Bell, was Rivian's COO for 9 months from 2019 to 2020. Rivian's background is cleaner from an investor perspective, partly because of the traditional IPO, founder-CEO dynamic, and stronger management continuity. More importantly, Rivian has had more success than Lucid in ramping initial production. Rivian's decision to inherit an existing auto factory, similar to what Tesla did with its Fremont factory, again just to remind everybody, they literally purchased that factory for a penny on the dollar at about 1% of what it was originally purchased for during the global financial crisis. Bargain of the fucking century. This is also why the Fremont factory is so inefficient compared to a clean slate design like Shanghai. The same is also true of Austin and Berlin. Tesla's doing the best with what they've got, but they didn't design this factory from the ground up to be efficient at producing their vehicles. They're making do, and they're still doing very well, but Tesla's major profit drivers will be new factories specifically designed to meet their needs. The article goes on to point out, rather than building one from scratch, which helped accelerate and simplify initial production. Ownership and partnerships. Rivian mostly raised capital through angel investments and loans until its first large equity financing round in February 2019. From 2019 to 2021, Rivian raised a whopping $24 billion in equity capital, in addition to $1.25 billion in debt via senior secured notes. If you guys want to nerd it out, pause, have a look at this table. Fascinating insight here. As we know, Ford made a big investment in Rivian back in 2019 in April, $500 million. And hey, good on them. Pretty good return in a short period of time, capitalizing on the bell curve and the frenzy, EV startups, the next Tesla and so on. 200 IQ move by Ford. Many of these investors have trimmed their stake after the IPO lockup expiration, but are still major shareholders. Below are Rivian's top shareholders as of Q2 2022. Note that this includes 908.4 million Class A shares with 1 vote each, and 7.8 million Class B shares with 10 votes each, which are all held by CEO RJ Scaringe. Again, fascinating table. If you want to nerd it out, please pause and run through every single number. We can see here, Amazon, the biggest shareholder in Rivian. Interesting. As of Q2 2022, Ford, 9.5% stake, BlackRock, 3.5%, Vanguard, 2.7%. If we keep scrolling down, eventually we get to RJ Scaringe, founder of the company, with a whopping 1.3% stake. Again, for context, Elon Musk owns close to 20% of Tesla. Talk about skin in the game. While the institutional investor list is impressive, the strategic partnerships and agreements are more important. Rivian's first 3 major equity investors were Amazon, Ford, and Cox, respectively, each bringing their own unique value add. In September 2019, Rivian announced that it was developing a custom electric delivery van called the EDV for Amazon, and that 100,000 of these vans had been ordered, with deliveries starting in 2021. Initial deliveries of the EDV didn't happen until July 2022, but are currently being used by Amazon to deliver packages in the US. This Rivian collaboration is a part of Amazon's plan to convert its delivery fleet to 100% renewable energy by 2030. On September 9, 2022, Rivian also announced a strategic partnership with Mercedes to produce electric vans in Europe. This is significant because Mercedes is one of the largest producers of vans globally, selling about 400,000 units annually. This further validates Rivian's technology and strategic positioning relative to other EV startups. And I just want to jump in here. This is definitely a fair point. Once again, volume production without going bankrupt, really f***ing hard. But Rivian are showing promise. That doesn't mean climbing Mount Everest is going to be easy, but it does mean it is possible. And now, onto Lucid. Lucid has also raised mostly equity capital throughout its history, most notably through its SPAC merger in 2021. There are few public fundraising details prior to its SPAC combination, but Lucid certainly raised less capital than Rivian. The company's largest shareholder, by far, is the Public Investment Fund of Saudi Arabia. In fact, the Saudis own over 60% of the shares outstanding, an abnormally large stake for a company of this size. And again, jumping in here, A, this is true, this is abnormal, and B, it's also a little bit disturbing. I mean, I think it's fair to say that the Saudis literally have Lucid by the nuts. Hopefully they don't tighten their vice-like grip. There's the whole what happens to people that get on the wrong side of the Saudis. This table shows Lucid's largest shareholders. As we can see, Public Investment Fund of the Kingdom of Saudi Arabia, over 60% stake. Vanguard Group, 2.4%. BlackRock, 1.6%. Pete Rawlinson, 0.5%. Talk about not a lot of skin in the game. That being said, in terms of dollar amount, this is still a shit ton of ownership. Just goes to show, versus Elon's close to 20% stake in Tesla, Mr. Rawlinson doesn't quite have the same incentive to make this company successful. The investment from the Saudis also comes with product orders. In April 2022, the government of Saudi Arabia agreed to buy between 50,000 to 100,000 Lucid vehicles by 2030. So putting that in context, per year, 5 to 10,000 vehicles. Not huge, but hey, it's something. This is a solid agreement that guarantees future product demand, but does little to help them ramp production, which is the company's biggest challenge today. Conclusion: both companies have a well-capitalized partner that can provide additional liquidity, if needed, in addition to billions of dollars worth of pre-orders. However, only Rivian's partnerships are beneficial from a strategic perspective. The Amazon partnership validates Rivian's technology and tests its products by using vans for high-volume package delivery across the country. Developing an electric van with Mercedes is another distinct advantage that will be a great learning experience. And again, this is a very good point. These partnerships lead to real products being deployed in the real world, which not only need to be produced, but allows Rivian to learn and improve its technology. With that said, and this is a very important point, these partnerships do add complexity, which ultimately could turn out to be fatal for Rivian. Rivian has to balance ramping production of its consumer vehicles at the same time as its commercial vehicles for Amazon. The R1T and R1S are actually built on the same production line, so that second SUV model doesn't add much complexity, but the Amazon van does. A lot of Rivian's cash burn and ramp-up costs are associated with the additional Amazon van production line. I view the outsized ownership of Saudi Arabia as a negative for Lucid. I'm pretty sure everybody does. This is an example of poor corporate governance, where the Public Investment Fund essentially controls the company and can influence management to protect their best interests. Going back to my earlier comment about the Saudis having Lucid by the balls, and hopefully they don't tighten their vice-like grip, that's the point I was getting at. The Saudis literally control Lucid. This has already come to fruition, as Lucid needs to build a factory in Saudi Arabia. And from an unbiased point of view, I don't particularly think Saudi Arabia would be the first, second, fourth, fifth, sixth, or 29th choice location for an electric vehicle factory. Construction is expected to start soon, despite the fact that this makes no sense for the business. Spot on. Lucid is still struggling with production, and already has to begin building a new facility in another continent. This will take away resources from its Arizona plant, especially once production lines are being installed in Saudi Arabia. A very important point, it's too early for Lucid to apply learnings from its Arizona factory in designing its second facility. Additionally, Saudi Arabia isn't a large car market with only about 500,000 vehicles sold annually. Yes, it's located near Europe, but Lucid will still need to pay incremental shipping, transportation, and tariff costs than if its factory was directly located in Europe. In fairness, Rivian is also planning its second factory, but at least the location, Georgia, makes sense and was selected by management, not a majority shareholder. Again, going back to the point about Lucid being held by the testicles. Product offering. Rivian's current consumer product offerings are pickup truck, R1T, and a 7-passenger SUV, the R1S, both manufactured on the same production line. Below are more detailed specs for these models as currently available. If you guys want to nerd it out, pause, have a look at the table. In short, decent products compared to ICE vehicles, some superior specs, especially around acceleration and so on. This is a good sign. These are real products with real specs. Rivian has ramped production of the R1T quickly. More on that in the financial section. Despite beginning production less than a year ago, the R1T was already the 11th best-selling EV in the US through the first half of the year. That's right, the R1T alone sold almost as many units as all pure EVs from Toyota, BMW, and Mercedes combined in the first half of 2022. Now that is something to ponder. Top pure EV models in the US. Surprise, surprise, Tesla coming in at number 1 and 2 with the Model Y and 3. In total, each selling over 100,000, combined more than 230,000 units just in the US, just in the first half of the year. Number 3, Ford's Mustang Mach-E, laughable at 17,000 units. Tesla's Model S, barely registering, under 15,000 units. Tesla's Model X, 12,000. Kia's EV6, around the same amount. The Audi steaming pile of excrement, about 8,000 units. Nissan Leaf and Chevy Bolt in the 7,000 range. And the Rivian R1T, over 5,500 units. Rivian is also addressing commercial applications with the EDV. Again, that's the Amazon van. These are just being produced for Amazon today, but will likely serve a broader customer base as production scales. The range of just 120 to 150 miles is much lower than the range of their consumer vehicles, which is a bit disappointing. Other specs and pricing details aren't publicly available since these vehicles are exclusively for Amazon until next year. It's unclear what type of discount Amazon is receiving, if any, relative to what other delivery companies would pay. Here's a small table with the very few specs we do know. Of course, Rivian envisions offering additional models at lower price points in the future. The next-gen vehicle models will be under a new R2 platform. There aren't many details available, but these won't be released until 2025 at the earliest. Again, I just want to jump in here. This is approximately the same point in time where Tesla is likely, if necessary, pending insane demand. If they don't need to make it, they won't. But if they do, this is the point where Tesla is likely to introduce their, call it $25,000 to $30,000 vehicle, a compact. At that point, it's game fucking over. That vehicle alone will sell many millions of units per year. And I mean like 5, 6, 7, 8+ million units per year when fully ramped. My best guess is that Rivian will offer a smaller, cheaper truck and SUV for its next two consumer products. This would be similar to Tesla's strategy, beginning with the more expensive Model S and X sedan and SUV, respectively, before offering the smaller and cheaper Model 3 and Y. Again, for a little bit of context, around 2025, Rivian will be introducing their Model 3 and Model Y. Around the same point, Tesla's introducing their next generation vehicle. As of June 30th, 2022, Rivian had around 98,000 net pre-orders, excluding Amazon's orders. Lucid's current product offering is more narrowly focused since it only offers one variant of one model, the Air luxury sedan. Maybe the most notable aspect of Lucid's product offering is the range. The Air has the highest range of any EV ever tested, and I'm still curious to see one of these torn down to determine how big is the battery pack. Lucid will begin delivering new variants of the Air over the coming quarters, allegedly. The Air Touring and Air Pure will put downward pressure on Lucid's average selling price. More on that in the financial section. Once again, here's a table showing all the specs of Lucid's current and potential future products. Obviously, all of these specs subject to change, at least for the products that aren't actually already in production. The $249,000 Air Sapphire, priced identically to Tesla's 2020, whenever the fuck it comes out, Roadster, with a 0 to 60 time of less than 2 seconds, may help offset some of the decrease in average selling price, but Lucid openly admits this variant will only be produced in limited quantities. I'm not sure it's even worth the extra effort and resources to make this model, given their current production issues, and jumping in here, I tend to agree. Aside from the Air, the only other model that's been discussed is the Lucid Gravity, a luxury SUV that's set to release in 2024. There are no details on pricing or other specs, but the Gravity will likely be priced similarly to the Air. As of August 3rd, 2022, Lucid has around 37,000 net pre-orders, excluding the Saudis' orders. Conclusion: both Rivian and Lucid offer compelling products that have been very well received by initial customers. There are still many product and service related issues that both companies need to work out, but this isn't surprising since they just began making their first cars less than a year ago. Both companies have already issued product recalls, Rivian for airbag issues and Lucid for screen display issues. While this may seem concerning, recalls are very standard in the auto industry. In fact, there were over 1,000 different automotive recalls in the US in 2021, impacting 35 million vehicles. The Lucid Air may have the longest range of any EV, but what's more impressive is the battery efficiency. The Air Grand Touring's range per kilowatt hour is 4.6, which is second only to Tesla's Model 3. More on this in a moment. This is a testament to Lucid's engineering strength and ability to minimize the weight of their cars. Now this is absolutely fair. However, a little bit more context is needed. The Lucid Air Grand sells for about 3 times that of a Tesla vehicle that it's being compared to, the Model 3. It doesn't take a genius to figure out that if the vehicle is being sold for, let's call it 3 times as much as what it's being compared to, the company selling the more expensive vehicle has the option of engineering the vehicle using different materials, different components that are significantly more expensive and significantly less massive, meaning they can get more range out of the vehicle because there's less weight, but the penalty is that it's much more expensive to produce. This isn't to downplay Lucid's engineering, it's a great achievement, but it's important to understand. If you're selling a vehicle for 2 or 3 times as much as your competition, it means you can use different parts, components, and materials that reduce weight, and therefore you get more range out of your battery pack. So it's not an apples to apples comparison. It's important to understand this. I've seen a lot of people, oh my god, what the hell? How come Lucid is so good compared to Tesla? I don't understand. The reason that you don't understand is because you're not thinking. If you're selling a vehicle for a higher price, you can use more expensive shit. Therefore, all things being equal, unless you're absolutely brain-dead morons, you should be able to get more range per kilowatt hour of battery. To take this to the most extreme example, if you were tasked with producing a vehicle and you were going to sell that vehicle for $1 billion with a beat, $1 billion to consumers, I guarantee if you had semi-competent engineers, it would have the best range per kilowatt hour of any electric vehicle on Earth by literally miles. Something to consider. Rivian has room for improvement here and needs to reduce the weight of its vehicles, among other areas, to improve efficiency. While trucks are heavier than sedans, even Tesla's Cybertruck is expected to weigh 30 to 45% less than the R1T. Rivian's end markets, pickup trucks and SUVs, are significantly more popular than Lucid's sedans, both in the US and globally. In fact, the top 3 selling models in the US in 2022 in the first half are all pickup trucks. 8 of the top models are either pickup trucks or crossovers/SUVs, while only 2 are sedans. Overall, around 50% of the vehicles sold in the US are crossovers or SUVs, and around 20% are pickup trucks. The mix of sedan sales is just 15% and continues to trend lower. 50% of the vehicles sold in the US, crossovers or SUVs, shout out to the Model Y, and around 20% pickup trucks, shout out to the Cybertruck. And the Model 3 fills in the gap with the 15% for SUVs. I just want to make an observation here that's kind of important. The strategic brilliance of Tesla first introducing the Model 3 and then the Model Y. Now you might think, hang on, that doesn't make sense. Why not go for the biggest market first? Tesla wanted to learn as much as they could with the Model 3 first and implement those learnings in what they knew would be a much higher volume vehicle, the Model Y. And they've done exactly that. I don't know the exact numbers today, but there was a period of time where the Model Y was significantly cheaper for Tesla to produce than the Model 3, a smaller vehicle. Think about this. There's more in a Model Y than there is in a Model 3. It should cost more, but it didn't. They sell it for more, which means even higher profit margins. But the reason for this disparity is because Tesla implemented everything they could possibly learn in the Model 3 into the Model Y to reduce the cost of manufacturing the vehicle. Strategic brilliance. We're looking at the top selling car models in the United States. We can see the first 3 here, pickup trucks. We've got the F-Series from Ford, Silverado, and Rams here, each 250 to 300,000 units in the first half of this year alone. Toyota RAV4, the first SUV in there, around 200,000 units. Toyota Camry, the first sedan, 135,000 units. And then look at this, Tesla's Model Y, 131,000 units in the first half of the year in the US alone. And that's before Austin has ramped. And in case you're unaware, the only vehicle that will be produced at Austin, at least initially until Cybertruck, Model Y. It won't be too long before the Model Y becomes the best-selling vehicle in the United States, period. You can fucking count on it. Rivian is serving larger parts of the consumer market, but its products also cover commercial applications, which Lucid doesn't address at all. By serving Amazon and other enterprises, Rivian's product lineup covers a much larger addressable market than Lucid's, which paves a clearer path for strong long-term growth. Both companies' products are too expensive for the average consumer today, and their goal is to offer cheaper vehicles in higher quantities, but Rivian is better positioned to achieve this. Rivian's products address larger parts of the auto market, are more affordably priced today, include more standard features, and have higher utility. This is partly why Rivian has around 100,000 pre-orders compared to less than 40,000 pre-orders for Lucid. Rivian is also further along in their production ramp and product roadmap, as Lucid is still years away from releasing its second model, which will still be a niche luxury product. But now onto the financials and valuation. First, Rivian's key metrics. In Q1 of this year, Rivian delivered 1,227 vehicles. In Q2, massive growth, 4,467. Gross margin in Q1, a whopping negative 528%, to be expected. In Q2, negative 193%. If you want to nerd it out, pause and check out the rest of the table, go for your life. While this article is mostly positive on Rivian, it's undeniable that their financials are an issue. Big understatement. Rivian has burned over $3 billion of cash in the first 6 months of the year, and cash burn increased slightly in Q2, despite a big sequential jump in deliveries. Gross margin of negative 193% also stands out. Even if you exclude key overhead, gross margin would still be negative 155%. The most troubling aspect of Rivian's financials are the bloated operating expenses. Core operating expenses in Q2 were over $1 billion compared to just $364 million for Lucid. Rivian absolutely needs to get its operating expenses under control if they want to succeed, aka not go bankrupt. The company is taking the right steps to address this and recently announced it will be laying off around 6% of its workforce. While this level of cash burn is a negative, it's understandable for 2 reasons. First, with roughly 14,000 employees today, Rivian has clearly pulled forward many of its investments in employees and infrastructure. Rivian doesn't need 14,000 employees to make and sell 25,000 cars this year. Good point. For context, Tesla delivered around 22,500 cars in 2013 and had around 4,400 employees halfway through that year. So just want to jump in here. At the same level of vehicle deliveries, Tesla had about 1/3 the number of employees. Talk about resourceful, lean, and efficient. Of course, Tesla is very unique and shouldn't be compared to Rivian at this stage, or any stage. But commentary from management confirms Rivian's strong belief they can scale revenue significantly faster than headcount going forward. Second, Rivian is ramping several vehicles at once, which again, certainly spreads themselves thin. Personally, were I a CEO of an automotive company attempting to climb Mount Everest and avoid going bankrupt, the less products that could kill the company, the better. Of course, it is a high risk, high payoff strategy. If they do survive, this will give them a little bit of a lead, a first mover advantage. It's beneficial because it gives Rivian a first mover advantage across multiple market segments, diversifies their product lineup, advances their scale relative to other EV startups, and gives them the opportunity to work with great partners like Amazon and Mercedes. All fair points. But ramping multiple vehicles obviously has a negative initial financial impact, which we're seeing here. There are also valid concerns around a lack of organizational focus on just 1 to 2 products given the difficulty in scaling production. Exactly, nail on the fucking head. Rivian doesn't have the benefit of applying everything they've learned ramping their first vehicle successfully to high volume into the second ramp of the second vehicle and so on. I wish them all the best. Rivian's cash burn is more palatable because of its strong cash position. Despite a higher burn rate than Lucid, Rivian has a much longer runway with its existing balance sheet. It's still very early for Rivian, and its financial profile should improve as production ramps. Fucking hope so. For context, management is targeting 25% gross margins and 10% free cash flow margins, which is obviously years away, but still achievable longer term, if they don't go bankrupt first. Lucid, aka Saudi Motors. Below are Lucid's key financial metrics. Q1 deliveries of 360,000... Deliveries of 360 cars in Q1 2022 and 679 in Q2. Gross margin, Q1 negative 326% in Q2, trending in the right direction, negative 200%. Again, if you want to nerd it out, pause the video, let's move on. Unsurprisingly, Lucid is also deeply unprofitable as it ramps its initial vehicle production. Year-to-date cash burn of around $1.5 billion is only half that of Rivian, which is positive, but the main concern is production growth, or production at all. Similar to Rivian, I believe Lucid's unit economics will improve dramatically if, keyword being if, it can scale production versus go bankrupt trying. The key difference is that Lucid is struggling significantly in this area. In fact, Lucid has cut its 2022 production target twice since March, which, in case you're bad at math, was only 6 months ago. In the span of 6 months, they've twice slashed their 1-year production target. Think about that. It's gone from 20,000 units all the way down now to about 6,000 to 7,000 units. Conclusion. Both companies clearly need to improve their cash burn and capital efficiency. The good news is that operating expenses for both companies fell sequentially in Q2 versus Q1, despite significant increases in production and deliveries. Rivian is burning roughly double the amount of cash as Lucid, but is also investing more aggressively in building out its infrastructure and product pipeline. Given each company's massive order backlog, the most important metric to follow is production, or a lack thereof. While Lucid has cut its 2022 production forecast twice, Rivian has maintained the same 25,000 unit goal for the entire year. The delivery data below is the best proxy for production since Lucid hasn't disclosed quarterly production figures. I wonder why Lucid would fail to disclose their quarterly production figures. I'm sure that's nothing to worry about. So in the second half of 2021, Rivian delivered 920 vehicles, Lucid 125. In Q1, Rivian, a little over 1,200, Lucid 360. And in Q2, Rivian almost 4,500 and Lucid just under 700 vehicles. So both companies still a very long way to go. After production growth, one of the most important factors to evaluate is each company's cash position, which is a critical buffer to de-risk operations. This is another area where Rivian has a clear advantage. As we see here, Rivian, cash and cash equivalents, about 15 billion, Lucid, not even 5 billion. As of Q2, Rivian has about $13.7 billion in net cash compared to $2.6 billion for Lucid. Ignoring debt, given the long dated maturities, Rivian has 9.5 quarters of runway at its current burn rate, while Lucid has only 5.6 quarters, a little over 1 year. Unsurprisingly, Lucid has just announced its intent to fuck over investors and... Oh, sorry, I misread that. Oh wait, no I didn't. Same meaning, different words. Yeah, no, I was right. Lucid has just announced an $8 billion shelf to improve its liquidity position. A shelf is a vehicle to raise funds in the future. Nothing has been raised yet, which will dilute shareholders, them in the ass without consent, and put selling pressure on Lucid stock over the coming quarters. One notable aspect of the financial comparison is the difference in average selling prices. Lucid's ASPs are 76% higher than Rivian's, yet Lucid has lower gross margins. Lucid also has the benefit of a simpler product lineup, as Rivian is suffering from production inefficiencies trying to ramp 3 separate models. As mentioned in the product section, Lucid's ASPs are set to decline materially once initial premium variant orders are fulfilled. Conversely, Rivian's Q2 ASP of $81,500 is more sustainable given the lack of cheaper options becoming available in the foreseeable future. Again, you want to nerd it out, check this table out, pause the video, let's move on. Taking everything into consideration, other than the bell curve, it's surprising that Lucid's market cap is this close to Rivian's. Now, I have to agree here, Rivian's market cap about 35 billion, Lucid about 25 billion. To me, neither of these valuations make any fucking sense. Don't get me wrong, I hope each company is successful, but they still today have to climb multiple Mount Everests without going bankrupt. Good fucking luck. But the thing that's stunning, and this is a very important point in this article by ForwardCap, is how close each company's market cap is, yet how disparate their progress and how different their future prospects. At this point in time, I'm pretty confident to put it on the record that Lucid appears to be absolutely doomed. There's a tiny fractional percentage chance that maybe they survive. But at this point in time, the whole fucking company's on fire. It is an emergency. They are going to be fighting for their survival. Meanwhile, Rivian showing great progress. I mean, maybe it's a coin toss. They might be successful. They might survive the decade, and I hope they do. Yet for these companies' market caps to be so close, it's clear, unequivocal proof that the bell curve is real. Again, I'm not here to hate on the companies. I hope they do well. When factoring in net cash, Rivian is cheaper on a total enterprise value basis. Rivian's valuation discount is amplified when looking at revenue multiples, at 3.3 times 2022 revenue compared to Lucid at 8 times. I'm not a fan of revenue multiples, but it's a useful data point here given the lack of profitability for both companies. I'm also more confident in Rivian hitting their 2023 revenue estimate than Lucid hitting theirs. Makes two of us, my friend. Summary. This is a great table summing things up. Rivian, founded 2009, again, Tesla in 2003, and Lucid in 2007, 2 years earlier. Rivian's current employee headcount around 14,000, Lucid around 5,600. Rivian's key partners include Amazon, who own 17%, Ford, who own 9%, and Cox Automotive around 4%, plus Mercedes. And Lucid doesn't have any key partners, just a controlling entity known as the Saudi Arabia Public Investment Fund, who literally have them by the fucking balls. Current vehicle segments for Rivian: pickup trucks, huge, SUVs, huge, and commercial vehicles, also a pretty sizable market. Lucid, sedans. Rivian's order backlog around 100,000 units, Lucid's not even 40,000 units. Again, if you want to pause and take in the whole table, go for your life, let's move on. I'm neutral on Rivian as a standalone investment, but believe Rivian will outperform Lucid from here. I'm just jumping in here, there's no way in hell I'm touching either of these stocks with a 420 quadrillion foot pole, but if I'm a betting man, and these were my only two options, I wouldn't have a fucking cent on Lucid. Again, I wish them well and they may be successful, but just looking at the numbers, the progress so far and the red flags, not looking pretty. And again, I want to emphasize, I really think it's going to be a struggle for Rivian too, but they're doing a lot better than Lucid. Compared to Lucid, Rivian has a stronger history of execution and maintaining guidance, production and sales track record, balance sheet and net cash position, existing product offering and backlog, future product roadmap, addressable market opportunity, management continuity, set of investors and strategic partners. In my opinion, Lucid is a lower quality company and will be facing several near-term headwinds. Over the next year, Lucid will be raising up to $8 billion that will massively dilute existing shareholders, most of whom won't actually realize what this means until it happens, and cause downward selling pressure on the stock. Building out a second I can't even say that. Oh, Jesus Christ. Building out a second factory in an extremely logical location, Saudi Arabia, despite not yet figuring out production at its existing Arizona factory. And this is very important. Lucid hasn't even figured out how to ramp production, yet they're already going to be beginning construction on a new fucking factory in a place that makes no sense. Good luck with that. Selling at lower ASPs as initial premium variant orders are fulfilled. Current ASP of $140,000 is unsustainable. And not releasing any new models outside of different Air variants. Gravity SUV is multiple years away and still a niche luxury product. As discussed in the intro, both companies have strong potential in a massive addressable market with structural advantages over legacy automotive manufacturers. Very fair point. With that said, there's a long road ahead for both Rivian and Lucid, and just jumping in here, a road with many forks, all of which lead over the edge of a cliff. It's possible, in fact I think quite likely, that neither company sufficiently ramps production or achieves positive free cash flow before going bankrupt. Even if they achieve these goals, it's possible the stocks are dead money for several years given the elevated valuations today, demonstrating that the bell curve once again is real. It will be important to follow both companies closely given the extremely wide distribution of intelligence as per the bell curve. Wait, did I read that right? Yeah, no, I think I did. I thought this was a phenomenally insightful article comparing Lucid and Rivian, and again, just using Tesla as historical context. Despite all the mistakes Tesla made, other companies should have been able to learn from. Both Rivian and Lucid are actually behind pace versus Tesla in terms of their lifetime as a company, and there's a gaping chasm between where Rivian are and Lucid. Now, I really genuinely do hope both companies are successful. I also think that they both have less than a 50% chance of surviving the decade. And as I said, if I were a betting man, my money would abso-fucking-lutely not be anywhere near close to being on Lucid Motors. They may be successful, but I tell you what, at this point in time, all I see is red flags for days. Let me know in the comments below what you guys and girls think. 1. Do you think Lucid will make it? 2. Do you think Rivian will make it? 3. Do you think the valuations of either company currently make any sense whatsoever? Given context, Tesla's market cap today less than $1 trillion despite how far along they are. Do the current valuations of Rivian or Lucid make sense, and will either company survive? And lastly, don't forget you can support the channel by joining Patreon with the card in the corner or the link in the pinned comment and instantly unlock well over 100 exclusive videos, up-to-date access to my Tesla stock price targets, plus optional access to my Tesla valuation model. So, see you over on Patreon. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment-themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.